Welcome to More Financial Talk. I'm Ryan Moore, and with me today is co-host Tony Shore. How are you, Tony?
Oh, Ryan, I'm excited about today's show. I'm doing great. I was having a great week anyway, Ryan, but now I'm especially excited because we have a huge guest on the show. And Ryan, you've come up with a great topic for today, something that's been in the news a lot lately. And a lot of people I know have asked you about this as a financial professional. And that's the digital revolution, whether it's Bitcoins or AI and what the market's doing with all that. So this is going to be a great discussion today. But Ryan, the big news is our special guest. This is a huge get. I don't know how you do it, Ryan. Who's our guest for today?
Yeah, so we're excited to have CFA Tyler Ellegard with us, a Gradient portfolio manager, and he's somebody I've consulted with on some of the digital spaces. There's a lot going on in this arena right now, so we thought Tyler would be a great one to get some time with and pick his brain a little bit on how he's viewing this new revolution that's now upon us.
Thanks for having me.
Welcome. Yeah,
glad to be here.
Yeah,
so Tyler. Yeah, go ahead.
Well, I was going to say, Tyler, he's got quite a background too. I mean, you manage so many different portfolios with Gradient Investments. And what's your exact title there?
Portfolio extraordinaire.
Portfolio extraordinaire. Portfolio
I like it.
Manager.
Yeah, so Tyler's a CFA, Chartered Financial Analyst. We believe that's a pretty big deal. That's a very difficult designation to obtain, and you do have to be a CFA to be a portfolio manager with Gradient. That usually takes years to obtain and multiple tests to pass. So with that, we've got a very knowledgeable fellow here with us today, and he does manage a handful of portfolios at Gradient, but the one that probably relates most to today's topic that he manages is what's called the digital discovery portfolio. So Tyler, maybe you can touch a little bit on that and what that all entails and how your outlook is on that.
Yeah. So back in let's late 2022, we obviously heard about this Bitcoin thing, right? Bitcoin was a popular topic back in 2017, 2018, and then it kind of fell out of the news cycle. And at Gradient, a lot of our portfolios, we're looking at high quality companies. We're looking at companies that most people have probably known about or use their products quite heavily. And so it was always a challenging thing to fit companies in these rapidly evolving technologies. We could add some, but we're not going to dedicate any of our portfolios to it just because of the volatility nature of the technologies and the companies. And so late 2022, we decided to launch the digital discovery portfolio, which solely focuses on the evolution of technology. So when we first launched it, the big focus, and still is a big focus, but blockchain, crypto, metaverse, and at the time you could throw NFTs in there. And as technology evolves, as new technologies become available, whether that's quantum computing, AI, that's where the portfolio is going to focus on and invest towards. So we have a portfolio that's dedicated to those spaces that's trying to capture the investment opportunity of AI, of blockchain, of crypto. But the focus of the portfolio is more on the value chain of those technologies versus crypto, for example. We're not trying to pick and choose which coins are going to be the best ones out there. We certainly can allocate to them, but the only way that we can do that is through ETFs. And so there's only a handful of cryptocurrencies that are available to us in ETF form right now. But again, most of it's the value chain. So the companies that are building the infrastructure for these technologies of AI, of crypto, of blockchain is really where the focus for the portfolio is right now.
Yeah. And so I know in past conversations, I think a good analogy for how you're viewing the portfolio would be relative to the gold rush, right? I mean, you can invest in gold, but I know a lot of the approach to investing in that gold rush was to invest in the picks and shovels, the things around the gold rush. And I think you would liken what you're doing with the portfolio relative to to crypto and the coins, the companies that surround that space.
Yeah. And not to say that we won't ever invest in the actual crypto coins either. Obviously, the portfolio isn't only geared towards crypto and blockchain, but we do have a 9% position to Bitcoin right now, just because we think of think of it as the opportunity of longer term investment. We don't have any governors on, you know, how much we can own of crypto, but what I'll probably say that we'll never have the entire portfolio be crypto. We'll still have that diversification in there of companies in crypto, of companies in blockchain, of companies in AI, quantum computing. But we certainly can allocate more towards the cryptocurrency space as we see fit and what that opportunity presents. And we think if that's the best outcome going forward, then we'll allocate more to it.
Sure. So, you know, in my experiences, you know, I've been tracking the space for a while, but what really got my attention was early last year in 2024 when BlackRock was able to get approved the first Bitcoin ETF. And in my mind, that legitimized the space to a great degree and gave me more confidence as an investor interested in this space to, you know, more than dip my toes at this point. And then since we've seen the new administration come in, we've really seen things evolving at a breakneck speed. The Trump administration's made it clear that he wants to make America the crypto capital of the world, the AI capital of the world. And so he's implemented a lot of new staff positions around him to try to, you know, accelerate the growth and development in the space in our nation. And right now we're in the throes of a lot of changing legislation to create more clear understanding of, you know, regulation in these areas. And I know there's legislation that is going through, you know, the Senate right now. And I'm sure you're tracking all of that. You want to speak to that a little bit?
I think we'll wait and see what happens. You're referring to the Genius Act or bill.
Correct.
I think we'll wait to speculate on what actually happens there. Obviously, there's a lot that can happen and needs to happen for that to officially go through. But I think generally speaking, these last, call it 6 months, have really put crypto in a fast-paced area of becoming even more legitimized, which I think is very important. Also, the challenging aspect of Bitcoin or crypto in general is just the volatile nature of the space, right? So we get a lot of questions about, are we going to move to Bitcoin being the currency or any other cryptos? I think the best case scenario would be a move towards stablecoins, and we can talk about what happened as of today, as we're recording this. But the challenging part right now from a currency and use case standpoint versus just an investment use case is that the currencies are just so volatile and hard to track. And you can't have a currency that, you know, Bitcoin could go from right now trading at $103 versus $1 it can't go from 103 to 100 in a matter of days, right? You have to have some level of stability there. And that's where the stable coins offer that use case. And so I think that's where the space, I think, is really growing towards, and just the ease of transactions and the stability and the interest that you get off of it and things like that. So I think stable coins are probably the future of actual transactions versus the space that we know as it today is probably going to be very different in the next year or two, in my opinion.
Yeah, so it's going to be interesting to see how this unfolds. And I think you meant to say Bitcoin trading at 103,000 a
Sorry,
coin.
yes, 103,000. Yeah, yes.
I hope it hasn't dropped that fast because
Yeah,
I do have some exposure there. But no,
103,000.
as I position this for clients and in the kind of the target market niche that we work with, which are folks that are approaching retirement or in retirement, you know, many people, this is you know, unfamiliar, uncomfortable. And, you know, certainly we're not recommending things for folks that are going to make them uncomfortable, but we do view this as a speculative opportunity that could hit a home run. And with that said, you know, we aren't recommending a high concentration. If anything, for those that do want a little exposure in this space, we might be recommending, you know, a 5 to 10% allocation. You know, that might even be on the high side for some. So we have seen more clients showing interest in this. And I think the digital discovery portfolio that Gradient offers is a great way for people to gain some exposure without having to worry about how to, you know, hold coins in these wallets and less susceptible to hacking and all of those things. And so just the sheer protection of investing this way versus others, I think gives a little bit of more comfort in terms of those that want to explore this type of opportunity.
Yeah, and the other thing that I'll say about that long-term investment is I compare this stage, this infancy stage, is even though Bitcoin itself has been around since 2009, I'd say the crypto space is still in its infancy, and I compare it quite a bit to the launch of the internet, right? It's just taking a different shape and form in the form of currency versus like this whole new internet thing. Um, it's going to take time for adoption, and it's also, people don't like change. It's a very scary thing to think about US dollars versus, this online internet digital transacting thing. But I always bring it back to what I start to ask people is how much of your transaction, or start with when you get a paycheck from your corporate job, is that in cash or is that just show up in your bank account? And most people will answer that it just shows up in their bank account. And then you go down the route of, well, how do you pay for things? Do you pay for things mainly in cash, or do you mainly pay for things with this plastic credit card? And most people say credit card or debit card, and that happens digitally already, right? That card just represents you paying for something, and everything, the transactions happen digitally, right? So we're already in the digital phase of transacting. It's just a different type of currency that we're transacting in versus US dollars, rather than, getting rid of this whole cash system thing. So it's just a change that people are unfamiliar with right now because it's so new that it's going to take time for that adoption phase to. So I would say probably the next 5 or so years is when that true adoption phase begins to happen. And that's where the investment opportunity is right now, because as that adoption continues to think about a snowball, right? It starts out small, and then as you keep rolling, it gets bigger and bigger. That's exactly what's going to be happening with cryptocurrency, and not as the cryptocurrency that we know it today. It's going to be more geared around the stable coins. And so I think it's going to be a very, very different environment, but it's just going to take time to get that adoption going.
Yeah, and I think, if you're following this space at all, you see where it's sort of seeping in a lot of different areas. I think one big notable development in just the last couple of weeks, there's a pretty known crypto company out there called Coinbase. And Coinbase just was approved to be one of the 500 companies in the S&P 500. I believe they kicked out Discover Card, and now Coinbase is in. And so, believe it or not, many people that are investing in the S&P and their 401k choices, they've got a little crypto, whether they realize it or not now, just by investing in the S&P. And Coinbase seems to be a very solid company to be able to get that spot within the S&P 500. And I think that's where we start to see more of the acceptance and the adoption taking hold, as one example.
Absolutely. I mean, when you think about, for the digital discovery, bringing it back to the portfolio a little bit, those are the kinds of companies that we're investing in, right? We're investing in the Coinbases of the world that are creating the building blocks for crypto trading, because Coinbase is a trading platform, just like Schwab, just like Fidelity, same exact concept, but they're just geared towards cryptocurrency trading. So it's that kind of company that we're really trying to focus in on, and trying to find that opportunity to say, we think Coinbase is going to be the winner in this space, so let's allocate money towards that company, rather than trying to pick and choose which coins are going to be the next greatest thing. But to your point on evolution, even just cryptocurrencies in general, there's cryptocurrencies that are backed by physical assets, whether that's real estate, precious metals. Like there's cryptocurrencies that are involved in AI, right? There's so many things that cryptocurrencies are doing, because cryptocurrency is just a thing of the blockchain that is behind it, right? So it's really the technology that's behind the cryptocurrency that is always the most important thing. So, I think eventually cryptocurrencies are going to be here to, they are here to stay, but I think they're going to be a bigger part of people's allocation in their investment portfolio, because of the technology that's actually behind them.
Absolutely. And so one of the big news stories of today on the market was a company that just came public through their IPO, initial public offering, called Circle. And Circle is known to be the second largest stablecoin that is referred to as USDC. And that was a pretty big deal. And the valuation has gone basically through the roof. And I think the price per share was set at $31, and it's now trading around $90 a share in the first day that it was launched. But this is a big development also in this space. And I know you had been following this Circle development a little bit. Anything to add on that?
Yeah. So when a company, just to show what the hunger is for this type of investment. So when a company IPOs, they go to what's called the market makers, the underwriters, the banks that are the ones working on putting the deal together to then sell the shares out to the public. And so what they do is they go out to the institutional buyers, whether that's mutual funds, pensions, endowments, big independent advisory shops. We're unfortunately not part of that yet. But they'll go out to those shops and say, how many shares do you want to invest in your mutual fund and your endowment and your pension? And then they'll get a level of demand, right? So and then where that level of demand meets the price or the supply is where they set the price. So they set the price last night and then continue to go out to more investors to say, do you want to be allocated any shares for the IPO? And then the day of the IPO, they then find the pre-trading range for the price, because if there's what they call an over commitment or an over demand, the price is going to go higher. And so they set it at 31, and it IPO'd at just over $90, I believe. And it's now that and then once they've kind of put the book together on the trading, sorry, I don't want to go too deep on this, but that once they find that level price of how much demand is there actually for the amount of shares that the company is selling, then they'll actually let it trade on the public exchanges. And so the fact that it went from 31 to above 90, and now I think last I looked, it was trading at about $88. So the fact that it hasn't even like dropped back down is very important, because there's just a hunger for this type of investment. We hear a lot about AI, the future of it, the demand for AI investment, and crypto is kind of from a company standpoint. We've heard a lot about the cryptocurrencies and the meme coins and that kind of stuff. But this just shows the level of demand for this type of company and this type of investment, and where the future of this is going to be going. Because obviously there's a lot of institutional investors that think this is going to be a ongoing thing that's going to continue to evolve and be an important part of our lives going forward.
Yeah, and I think with some of the changing legislation, this is going to open up the doors for banks to get more involved in this space as well. And I think for our listeners that may still be struggling with some of this terminology, when I think of Circle specifically, or the stablecoin USDC, it's basically tied to the US dollar. And so my understanding is, let's say that you did own, Bitcoin on a crypto exchange and you wanted to sell it. Right. Well, you can sell it to the stable coin, basically converting it to US currency, but on a crypto US currency. And then from there, if you wanted to funnel it back to your bank account to actual fiat dollars, that's how you're basically converting your Bitcoin to dollars to be able to go spend your dollars. So the idea in the legislation that where they think this is going to benefit our country is having legislation and stablecoin clarity, where this could help boost our treasury holdings, where you're going to have a lot more US dollars sitting in, this type of stablecoin position, boosting our treasury holdings. Does that sound accurate to you in terms of how I'm viewing it?
Yep. So I think that where from my conversations, where a lot of people get lost is, why would I let my dollars sit in this stable coin that's a cryptocurrency rather than just keeping them in a dollar? And the use case for it is it's faster for transactions, right? So let's say, for example, you're trying to send money to a relative, whether that's birthday, anniversary, maybe you're giving them money to go buy a car, whatever it is, or a friend or a business, whatever it might be. The ability for you to transact is significantly faster than if you were to do a wire or if you were to do just a check or anything like that. So the ease of payment is almost instantaneous versus, this drawn out I bought a house about a year and a half ago, 2 years ago. And you have to go to the bank, you have to set up a wire, you have to do all of these different steps along the way to send your money. Whereas I could have been in the room at the same time, sent them the money right now. They could have been across the room from me and seen that the transaction hit their account, and it would have been instantaneous, right? So that's the purpose of these, is the backbone of our financial system right now is still very, very archaic, whereas these are obviously new gen, right? So it allows you to do everything much, much quicker. And everything is secured, everything is recorded. There's not one bank saying that, oh, well, you didn't actually pay this, right? They have full control of your money as well. Whereas this allows you, there's not one person has control over your money, right? Like you have money in this Stablecoin, you're the one that owns it. Whereas the bank, if a bank goes under and you have $500,000 in a bank account, you're only FDIC insured up to $250,000. So you could theoretically lose $250,000 by putting money in a bank, right? Whereas you actually own your money on the blockchain for the stablecoin as well.
So it's the difference of whether you're acting as your own custodian or using another institution to custody your money. And
Yes.
that, like you said, if something gets shut down, you lose access to your funds. Because even FDIC doesn't mean you're getting that 250,000 right away. That's a process.
That's a process.
Yeah.
Yep, exactly. So you're right. That's a good way to put it. You are the custodian of your money. You have the rights to your money, whereas in a traditional bank, you don't have the right to your money because they take in your money and they go lend it out. That's what a bank does, right? So you have full control over your dollars at that point.
Yeah, and I think the attraction is the cross-border transactions
Yep.
that are going to be more instantaneous. It should lower or eliminate a lot of fees too.
Fees
That
is a big one.
is a big part of it as well. Now, you've used the term blockchain along the way here, and again, I think that's terminology that most are not going to understand. My understanding of what blockchain means is it's basically like computer coding.
Mm-hmm.
Right. So maybe you can just elaborate a little bit more on, what that sort of means in a tangible understanding.
Yeah. So a good way to look at blockchain is think of a ledger, right? The blockchain is just a ledger of transactions. So I send money to you, that gets recorded on a ledger, right? Whatever modem of exchange that is. You send money back to me, it gets recorded on a ledger, right? On the blockchain, that ledger then gets distributed to every single computer on the network, right? So every computer on the network has a copy of that ledger. So you can't go in and adjust this so-called ledger. Does that make sense? Whereas with a bank,
Creates like a footprint.
yes. Whereas a bank, right? The bank is the only thing that can see the ledger. They can adjust the ledger. They can do anything. Not saying that they will, but it's a lot harder.
Not as transparent.
Yes, exactly. So the blockchain is a transparent ledger that is very, 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 very hard to adjust once a transaction has happened. So it's transparent and it's secure.
Yeah, hence the words block and chain. And so it's basically so many different computers have it. It's transparent.
Yep.
And no one person can go in and change it once it's happened. And that's the beauty of Bitcoin and blockchain, right?
The other thing that I'll throw out there, that because we're talking about every computer on a network having access to it, it's not like, so a good use case scenario for the blockchain is healthcare, right? So if you go to so here we've got Park Nicollet, Fairview, Children's, right? Every city has their number of healthcare providers. And if you go to one provider, that information doesn't transfer over to another provider, right? You have to fill out the forms. You have to tell them everything that you need to. On the blockchain, you could instantaneously send a new provider all of your information that you have, but here's the thing: is every computer on that network has that information, but they can't see it because it's all encrypted, right? So not every computer can just get into and access your financial health data and see what's going on and OSHA compliant type of stuff. It's all encrypted, meaning there's a big chain of numbers that someone would have to try to hack to actually get access to the information that's on that block. So it's still secure, even though computers on the network have it.
Yeah. Yep.
Right.
But it can't be changed.
And it can't be changed.
Yeah,
exactly.
That's the key.
Yeah.
That's where the footprint comes in.
Yep.
Or the digital fingerprint. Yeah.
Yeah. Well, all I know is it's a whole new world these days, especially in this space. A lot to keep up with. So while we have you here for just a little longer, Tyler, you want to touch on any market outlooks for our listeners and how you're viewing the second half of the year to shape up?
Yeah. Where to start on that? So we have this thing called earnings season. It's when a majority of companies report around the same schedule, their quarterly results. So we just got through Q1 earnings season.
Yeah.
And there's a lot of concern going into the quarter that companies were going to, so when you're investing in companies, when I'm looking at a company, I want to have the management team give me some sort of idea of how the year is going to be shaping up or the next quarter is going to be shaping up. It allows me to anchor my estimates to something, right? If a company doesn't give you that, you have no idea, and you might as well just close your eyes and throw a dart at a dartboard and put your estimates out there. Like, it doesn't help you. And so for the investing community, it's really helpful if we have some type of guidance, because then you can make adjustments. Like if you're tracking the underlying data of retail sales and you think Walmart's going to sell more goods than what the management had told you they were, right? You can adjust your earnings to that. But if they don't give you anything, you can't do that. So going into the quarter, with the uncertainty of tariffs, right? Liberation Day, April 2nd, the reciprocal tariffs. The concern was that companies were going to just pull their guidance and not let the investing community have any idea of where earnings were going to go, because earnings is really what drives the market. If you have 8% earnings growth, generally speaking, if you take out macro events and valuation, you could expect 8% growth in the market. That's what drives overall companies. And so the concern was that we weren't going to have that guidance, just because companies didn't know if there was going to be, if they imported stuff from Vietnam, they didn't know if there was going to be a 10% tariff. They didn't know if it was going to be 49%. They didn't know if it was going to be 20%. Like, there's just so many moving parts. They also didn't know how much the cost impact was going to be, because maybe they try and switch supply chains to a different country or whatever it is. So there's just so much uncertainty going into the quarter. And so we saw the massive drawdown after April 2nd. I think the S&P hit down like 18% from the highs, almost 19% from the highs, which is almost a bear market. But then we started to get reports from companies, and companies actually gave guidance, meaning they told us, the rest of the year, yes, we might see a $200 million impact on expenses, but we can adjust our supply chains and we can adjust our overall expenses to negate that. So we're going to give you guidance, right? So that gives us a lot of confidence in management teams and companies to be resilient through the uncertainty of tariffs. So I think in the back half of the year, I think you could actually have a pretty strong stock market, to be honest with you, just based on how earnings went. But we have to be somewhat selective, because I do think there is some pressure on consumers right now. We had a ton of inflation back in 21 and 2022. And we're still adjusting to the new realm of prices, right? Prices feel a lot higher at the grocery store. Go out to eat, prices feel a lot higher. So I think consumers are still adjusting to that. So I think there are a lot of pressures on consumers, especially the lower income cohorts, which can have a snowball effect. So I'm watching the consumers very, very carefully right now to see what their spending patterns look like. But I think the overall market, because the overall market is really being driven by tech names right now. And so if those tech names continue to invest in AI, and we're talking a lot about crypto. So I think if the evolution of that technology continues, which I think it will, I think the overall market can do well, but we have to be selective right? We don't want to be heavy consumer focused type of companies right now, just because I think there'll be some weakness there. But if you invest in the S&P 500, you're investing in Apple, you're investing in Microsoft, Meta, which is Facebook, Google or Alphabet, Amazon, right? Companies that are heavily involved in the development of AI. And I think those companies will continue to do very, very well.
Yeah, and I think there's still a bit unknown to come here as we're waiting to see how these trade negotiations shake out. And, markets, as we know, do not like certainty, as we experienced that massive drop when Trump rolled out the tariffs on April 2nd for Liberation Day. But I do believe the S&P is back to where we were prior to the tariff rollout. So for those that stayed the course and didn't panic, I think it paid off, as markets are resilient. But yeah, it's going to be interesting to see how things play out and if these pro-growth policies take hold sooner than later. But I'm an eternal optimist, so I'm encouraged where things are heading.
Well, in a market like the S&P, it's always good to be a eternal optimist because you tend to be rewarded for that. So that's a good thing.
Well, Tyler, it's been great having you on today. We greatly appreciate you taking the time, and we'll connect with you along the way here as time unfolds. But thank you so much. We greatly appreciate your expertise.
Thanks for having me, Ryan.
Well, Ryan, before we go, let our listeners know, I'm sure our listeners have questions about some of this, or how much of this, or what can they get in their portfolios, some of the portfolios that he works with. How can they get a hold of you and get that information, Ryan?
Sure. So our direct number, if you want to give us a call, is area code 615-467-6300. You can also email our office at info@rsgtn.com, or just check out our website at rsgtn.com, as in Retirement Solutions Group, Tennessee.
All right. Thanks so much, guys. Thank you, Ryan, our host, Ryan Moore, and our special guest today, Tyler Ellegard from Gradient Investments. That does it for today's episode of Financial Talk with Ryan Moore.